China is battling cryptocurrency by promoting the digital yuan. China initially appeared to embrace cryptocurrency as part of its quest to become an advanced economy. The country opened its first Bitcoin exchange in 2011, just 2 years after the cryptocurrency was created. By 2016, China was a major player in the industry, both as a trading hub and a manufacturer of mining equipment. However, since 2012, when Xi Jinping assumed the presidency of China, the crypto calculus has shifted. It is becoming increasingly clear that the very nature of cryptocurrencies tender that can be freely issued by private companies and individuals and that enables decentralized and anonymous transactions is fundamentally incompatible with the Chinese Communist Party's governing approach to the digital economy under Xi. By 2019, as Facebook was developing the Libra crypto project, Mu Changchun, a senior official at China's central bank, warned that a privately developed super-sovereign digital currency posed a definite threat to central bank authority. That same year, Mu was appointed head of the team charged with developing China's digital yuan, a concept inspired by cryptocurrency but reserving control for Beijing. Now, as China begins its toughest crackdown on cryptocurrency to date, the digital yuan is becoming a reality. What exactly is a digital yuan? After nearly 8 years of development, the digital yuan was placed in the wallets of ordinary users last year as part of government-led trials. The central bank distributes the digital currency to consumers via 6 major commercial banks, typically via a wallet app. Users can pay by scanning QR codes or using wearable devices, such as physical wallets embedded with digital yuan chips developed by one of the 6 banks, Postal Savings Bank of China. By June, the government reported that there were approximately 20 million digital yuan wallets and that transaction volume had reached 34.5 billion yuan, $5.3 billion. Apart from being at the forefront of digital currency deployment, China's government has 3 major goals in designing and promoting sovereign virtual money. It wishes to gain a better understanding of the country's money flow, which is concealed in cash transactions and even in mobile payments whose data is held by private firms. This is ostensibly to strengthen monetary policy and to combat illicit activities, such as money laundering. It seeks to reclaim control over payments that are increasingly being mediated by private companies such as Ant Group's Alipay and Tencent's WeChat Pay. Both of those companies have faced antitrust investigations and pressure to share data with the government as part of a broader regulatory crackdown on technology. It aspires to improve the yuan's international standing in the long run, easier said than done if all else remains the same. Many initially questioned whether a state-developed digital yuan wallet could compete with the payment systems already offered by China's technology giants. The digital yuan offers few advantages over existing payment methods and appears to be more like food coupons with numerous restrictions, so I personally would resist using it, a Weibo user said, referring to the stamps citizens used in the 1980s to obtain rationed food. However, the digital yuan incorporates a critical feature that may increase its appeal, particularly among rural users. It enables people to transact even when they are not connected to the internet, simply by tapping 2 digital yuan-enabled phones together. This offline function is extremely powerful in China, particularly in rural areas, says Fiorenzo Mingoniello, founder of Lian Group, a private equity firm that owns renewable Bitcoin mining farms in Europe. That is unquestionably a significant advantage. Global apprehensions about the digital yuan. The rest of the world will see the digital yuan for the first time at next year's Beijing Winter Olympics, and China's government has been hard at work preparing for the rollout. ATM machines will be available at the games to exchange foreign currencies, including US dollars, for virtual Chinese money, which will be carried on a digital yuan wallet card. They want the digital yuan to have a coming-out party during the Olympics, says Josh Lipsky, director of the Atlantic Council's Geo-Economics Center. However, internationalization will not be easy. For one thing, China's tight control over the exchange rate has already hampered the physical yuan's widespread adoption, and this policy will continue to discourage some from adopting the digital version. A digital yuan does not solve the problem that some people holding renminbi offshore will want to sell them and exchange them for dollars, Victor Shi, a China expert and professor at the University of California, San Diego, told Quartz last year. US dollars account for nearly two-thirds of the world's currency reserves, compared to 2% in yuan. Beijing's reputation for prying into citizens' lives via apps may also be a source of concern for potential digital yuan adopters. Surveillance objections may even result in countries lobbying their athletes to abstain from using the digital yuan during the Games. In the United States, some Republican politicians are already exerting this pressure. Unlike truly anonymous cryptocurrencies, China's central bank says the digital yuan will provide users with controllable anonymity, as users will be able to obtain the digital wallet by registering with their mobile number. Due to the fact that people in China are required to register their numbers with their real identities, that promise may carry little weight. Mu, the central bank's deputy governor, stated that service providers will not provide the bank with user information, rendering wallets registered with mobile numbers completely anonymous. However, it is the broader ethos of control that concerns multinational corporations. How do you feel about digital yuan and the government's people's bank's ability to potentially halt payments if there is a problem? Lipsky inquires. I believe that Western investors and businesses are closely monitoring the development of the digital yuan and considering the implications for their business operations in China. The threat of the coin. Though China has been working on the digital yuan since at least 2014, its efforts have been accelerated by the emergence of stablecoins such as DM, formerly Facebook's Libra, and yet to be officially launched. Stablecoins are cryptocurrencies that are pegged to traditional assets such as the US dollar, removing some of the volatility associated with cryptocurrencies and potentially broadening their appeal. Certainly, the development of cryptocurrencies facilitated the development of the digital yuan, says Zenon Capron, director of Capronasia, a fintech consulting firm based in Singapore. It really opened up the doors in terms of technology or concept being present. In China, a sizable portion of digital payments are already processed by private sector mobile wallets such as Alipay and WeChat Pay, whose level of control Beijing is already concerned about. Stablecoins sowed fear of anonymous pockets of digital payments that bypass the yuan entirely. The idea that you could have a global stablecoin tied to a company that is essentially based on the dollar, and that transactions within China could take place in either the dollar or a basket of currencies, is concerning, Lipsky says. Because you fail to maintain control. China's volatile cryptocurrency history. Bitcoin was founded in 2009, during the depths of the global financial crisis. 2 years later, BTC China, the country's first Bitcoin exchange, began trading the cryptocurrency for Chinese citizens. Bitmain, the world's largest manufacturer of Bitcoin mining machines, was founded in 2013 by a group of Chinese crypto brothers. Cryptocurrency thrived in China for a variety of reasons, including the fact that the majority of the population was already familiar with the concept of virtual currency thanks to Tencent. The gaming giant's Qcoin was not a cryptocurrency, but was instead used to pay for value-added services and was already trading on secondary markets. For those in China restricted by capital controls and seeking alternative investments to sky-high real estate, Bitcoin served as both an investment vehicle and a means of international money transfer. Between 2010 and 2016, China saw the establishment of several cryptocurrency exchanges and Bitcoin mining hardware manufacturers, while investors poured into waves of initial coin offerings. Beijing did not take kindly to this. China banned initial coin offerings and cryptocurrency trading in 2017, the same year that development of the digital yuan accelerated. China banned cryptocurrency mining in 2021, forcing many miners to seek refuge in countries such as the United States or Kazakhstan. Additionally, the government has directed banks and payment companies to refrain from providing services for crypto-related transactions, a crackdown that could leave the digital yuan as one of the country's few viable digital currencies. They are ensuring that as they enter this new era of central bank-backed currencies, any market risks are eliminated or mitigated, says Capron. The crackdown on cryptocurrency mining and exchanges fits within that narrative. As we move forwards in this new situation, you should eliminate all risk and make every effort to ensure that we begin with a clean slate. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.